How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options trading program. What we're going to do is we're going to break down the QuantumScape play, how we got 100% return on our options plays on this QuantumScape put. This video is going to be for the public. It's going to be for the YouTube channel or other social media. And then if you want the more in-depth video, that's going to be for people that are in the paid courses, whether it's going to be the IPO course because this was a SPAC play, or that are in the main course because I'm essentially create a video for both of those particular platforms. So you're going to get a kind of like a preliminary walkthrough. And if you want something a little bit more in depth, we kind of break down some of the finer details of this play. You need to get inside the particular community and ask yourself, is the value that we're giving worth the price of admission? So let's go ahead and get into it. So we're looking at is the screenshot of the put contracts from this QuantumScape play. It was an April 23rd, $35 put. It was purchased on the 15th and we exited the play on the 20th. And we got around 100% return. I think it was like a 99.2. We just rounded it up. 2 contracts for puts. When I bought these contracts, I want to say I might have been a few dollars out of the money. But what we saw was that it hit that particular, it got in the money and then it got lower than my actual strike price. So we exited with, I want to say maybe $3 to $4 in the money when we took our exit. And then we also had some extrinsic time left on the contract because we exited on Tuesday with the contract not expiring until Friday on the 23rd. OK, so we got the contract on Thursday, rolled it into the next week, and we got out before the expiration date. So we were in the money also with time left on the contract. That put us in a really good position. So what we're going to do is we're really quickly going to kind of try to give you an understanding of what we observed to give us some conviction on this particular play, because I want you to be able to take some of this and apply it to your trading. So let's go ahead and get into it. So first, let's look at this chart. And this is of QuantumScape. So the ticker is going to be QS. This is the yearly chart. So you're seeing it come out. It was a SPAC. I think it merged with a company called Kensington, if I got that particular name right. And what we saw it do is it ran up really, really hard. So let me zoom in. It ran up really, really hard. And they were at around 131 in December. And then we've seen ever since they hit that particular date, they've fallen. And they had one really, really big gap where they closed at 84. This was on the 31st of December. And then I believe on when the new year, which is the 4th, they opened at 58. So that's a big, big, big drop. And then they came up a little bit. And then essentially they traded horizontal, but kind of going down after every bump up. So what we're at now is a close of 34.15. And we could say around the first of the year, they were around 62. So we're about $30 off a first of the year price, and we're about 4 months into it. Now, the challenge is that how come this company rose up so fast and then it also sold down so fast, especially with this massive gap here? And one of the reasons is in my argument is that this company was trading really way past its fundamentals. And there was a lot of hype around this particular company. And what you're seeing with a lot of hyped based companies is that they a lot of times go down just as fast as they go up. What we're talking about is a company. Let me give you a background on what this company does. They're supposed to produce a solid state battery for the EV space, but not just EV. It's supposed to have multiple applications, right? The company is very much in the R&D experimental stage. They're still trying to get proof of concept from a physical product. And then once they do that, they got to try to figure out, are they going to do manufacturing? Are they going to outsource manufacturing? So they're not only going to produce reliable working prototypes, but then we also got to figure out a way to create economies of scale from a production standpoint. That's going to take really, really valuable partnerships. But what they are in right now is the R&D space. So that's what this company does. And they're telling people that we're not going to have a viable product to take to the market till after, I want to say 2024, around 2025. Some people may feel earlier than that, but we're two to 3 years minimum away from an actual product that can be sold in the marketplace. So what people were doing was they were bidding this company up, even though they're not going to have any revenue or any real legitimate revenue or any sizable revenue. Why? Because they don't have anything to sell. They don't have a product to take to the market. OK, and as of right now, from my understanding, there were one product company, and then they also have something that we call really, really narrow customer concentration. And we're going to kind of go into that later, because if you don't have anything to sell, then you don't have anything to sell it, any person to sell it to. So if I don't have a product, then I don't have anybody to buy the product. Why? Because I don't have a product. Right. So you got to understand these are some of the things that were kind of limiting They're forecasting. You're dealing with really an experimental company, almost like a pharmaceutical company, but they're not a pharmaceutical company. They're in the quote unquote EV space, which is really hot right now. So that's what people were looking at. So we saw this thing move up and then sell right back down. Now I missed it when it was coming down here because I was watching a whole bunch of other things at the same time. So I knew about it, but I missed it on the run down. But I was going to wait for a particular date in which I believe that they were going to expand the float. And that's when I was going to probably buy puts on it. OK, so that's the narrative. Now, one of the questions is what made people so bullish on this? Well, one is that people believe that it's quote unquote backed by Bill Gates. Now, you got to be careful about these kind of stories because the way in which they headline stuff is designed to create an idea in your head. So the backed by Bill Gates is designed to create legitimacy in the modern retail. But I want you to understand something. So we're looking at this article right here. OK, so they're talking about his investing in Bill Gates. Now, I want you to understand something. Bill Gates has a fund that invests in companies. So the thing, what they're trying to do from an idea standpoint is to give you this idea that Bill Gates has kind of vouched for this company. Not necessarily so. What Bill Gates has done through his fund, right, is invested in specific companies. So it's called Breakthrough Energy Ventures, right? Along with the backers of QuantumScape, right? Along with another company called Volkswagen that we're going to talk about, is committing more than $300 million, right? I'm sorry. Breakthrough Energy Ventures has backed this particular company, and then Volkswagen has also added money to it. So by 2025 is a date in which they're supposed to be producing solid state batteries, right? And then we go more into this particular article, what it's about, yada, yada, yada. So this is what I want you to understand, because this article kind of makes you believe that he's kind of like in the loop of making sure this company is going to be successful, which is kind of what people are believing about it, which is why people became so bullish on it. So it's called Breakthrough Energy Ventures. They got 7 investments. So it's not just QuantumScape. So what it is a $1 billion energy innovation fund, spearheaded. They have 7 companies that they're investing in. So 7 or greater, right? So we got Carbon Cure, Commonwealth Fusion Systems, DMC Biotechnologies, Fervo, Pivot Bio, QuantumScape, and also Zeo Mass Water. So QuantumScape is a list of companies. So a lot of times when you're looking at venture capitalists or venture capitalist funds, they're invested a lot of times in a lot of early stage companies, and they have a portfolio because they understand that the majority of these companies are not going to work. But what we're doing is we're hoping that 1 or 2 of them are so successful that they cover the losses we make on the other companies that don't work. So what's interesting is that nobody's talking about these companies. They're just talking about QuantumScape. But those aren't the only companies that Bill Gates' fund has a role in them. And so, of course, they want them to be successful. So they may be offering some type of advisory to them. However, it doesn't mean that Bill Gates is working hand in hand with this particular company to make sure it's successful. Doesn't mean that. Bill Gates is also doing vaccines and education. Guy got a lot of stuff on his table. So this is what I want you to understand. But the goal of media is to get retail to believe that this is a home run. Why? Because it's backed by Bill Gates. OK, it's backed by Bill Gates. And then now what I want to talk about specifically is that so the companies are receiving levels of funding ranging from 200 million to 20 million. But the precise amounts for each company not being publicized. And that's what I wanted to know. I wanted to know how much money has the Bill Gates fund put into QuantumScape. And I can't find that information out because it shows me their level of commitment at that particular time. So if we find out that Bill Gates' fund might have put in, $500 million in the QuantumScape. Well, that's not a small amount of money, but I'm sorry, $500,000 in the QuantumScape. That's not a small amount of money, but it's also not a ridiculous amount of money. So that's what I want people to understand. So people were bullish on this because all they hear is that Bill Gates backed it. And in their mind, Bill Gates is a billionaire. He's smarter than me. He must see something that I don't see. So then therefore, that means I should chase this particular company with my capital. Now let's go into the Volkswagen investment because these are the 2 names that's attached to this particular company. So we got this article from Volkswagen. It's their own press release, right? So it's in 6/16/20. They increased their stake in QuantumScape. So you can kind of read it in the headline. Volkswagen Group making an initial investment of up to $200 million in U.S. solid state battery specialist. OK, then they go into the whole PR. Right. So they gave an initial investment of over $100 million. It's up to 200 million. So it doesn't mean it's 200 million. It's up to 200 million. But I want you to understand something. Volkswagen is a very large company. $100 million might not mean the same thing that it means to me or you than it means to Volkswagen. Right? So they may be also doing something similar to the Bill Gates fund, where they're trying to cover certain areas, because I heard that they've also given another battery maker some funding. And they're trying to figure out, well, what area is going to receive more of our attention based on them being able to bring something to us to show that they have something valuable. So this is not to diminish what QuantumScape has done as a company. Yes, they've been able to attract capital. They've been able to attract a level of expertise to the scenario, and they've been able to get corporate backing. However, they're so early in their development stage, right? I don't think it's wise to chase this. And especially when you're looking at this particular scenario, to chase this up, because let's say that it goes to 125 and it consolidates, right? Well, what does it go after that when we know that they're telling you that they're probably not going to have a product to bring to market at 2025? What does it trade on after that? If we're at 125 but we can't even bring a product to market till 2025, what does it trade on? That's the question. So why are you chasing it up? Because what are they going to trade on? So is Bill Gates going to do like a live stream every month and talk about the advances in product development for this particular company? You think he has that kind of time to develop to give that much focus just on that one company, when we see that he's also backing other companies? Then he got his own scenarios that he got going on, like I said, with the vaccines and the education. So the question is, what does it trade on at 125 once it hits that particular number? So once it hit around 125, of course it came right back down, because it was hype that brought this thing up. And so this is what I want people to understand. You have to start understanding what is actual information that can kind of let you substantiate whether or not this is a valuable company, and what is hype. And a lot of times the way information can be presented, it can be in a very hyped up form. But then you want to ask yourself these questions. If something is backed by Bill Gates, well, what does that really mean? Because that's just a headline. It's just a headline. It's trying to give you the idea that he's 100% in the corner of this company. But when you start looking into the finer details of it, it doesn't necessarily mean that. So that's what's going on. Now, what happened is last Thursday and now this thing has been falling. Then it consolidated, right? And then I want to say around here, it started to fall a little bit more. Now, what happened last Thursday was that a particular short seller firm called Scorpion Capital put out, which was last Thursday, so it was a week ago from today, put out a short report. Now, I found out about the short report because a member of my network texted me, I want to say around 7 o'clock in the morning, Eastern Standard, and told me that this particular company is going to issue out a short report on this company. And I was waiting for something else as a catalyst to push the stock price down, but then I heard about this. And what they're saying is that the battery's performance, right, is not actually accurate. What they're reporting from a performance standpoint is not accurate. In fact, it is inaccurate, right? And so they gave all these different reasons why this was essentially just a pump and dump scheme for the original pipe investors. And you maybe want to go Google what a pipe investor is, because we talk about this is a SPAC play. This is not a traditional IPO. It's not a direct listing. This company was brought to market as in form of a SPAC, right? And so once you kind of understand some of the things that are going on with SPACs at this particular time in the market, you may understand why some people were pessimistic about what this company actually was. So here's an article from Barron's in which we talk about this. So now, once the short report came out, I understood and I felt that this was going to create a lot of downward pressure on this particular stock price. So we see around the time that the short report came out, it just been selling off, and it just continued to sell off. So we got, red day, red day, red day, red day. And it just kept selling down. Now, we've had 2 green days in a row, but it fell so far. It's just trying to recover back up. But the question is, where does it go from here? Because we talked about before, you're not going to have a product to around 2025. So what are you trading on? So a lot of this price was artificial. It doesn't matter if Bill Gates is backing it. It doesn't matter if Volkswagen gave them $100 million. They're a business. So the question is, what do they do business on without a product? When you ask yourself these kind of questions and you don't let Bill Gates or Volkswagen do your due diligence for you, it can put you in a situation where you can kind of understand what's going on. But we talked about, a lot of people want other people to make the decisions for them. So I don't want to do due diligence. I don't want to make my own decision on where to put my capital. I'll let Bill Gates do it. Well, once you really start to understand this market, you can learn how to take that mistake that those people are making and use that to make some money for yourself. Because something else I want to show you, and I'm going to go ahead and wrap this up because I don't want to get too deep into it. It has around, based on this particular platform, around 40% institutional holding. That's not bad, but it's also not like a really, really high institutional buy-in. And that could be because, like I said before, they haven't really proven anything. So what it means is that it can't really stop. It's not really positioned to stop downward pressure. And that's what we're seeing with this particular chart. Like nobody's coming in to come save this company. Right? Because we don't know what the institutions got in. They might have got in at $5. So they're still cool. And they can just sit in there and wait until find out if these guys actually can come up with a product that actually can sell. So that's what I want you to understand. So the ways in which I was able to really take advantage of this is when I had already identified this company as being a weak company. And what I look for is weak companies. I don't believe a company is really what they say they are until they actually show it. This is business. This is not a fan club. I'm not in a fan club of any company, right? I'm not a fan of any CEO. That's not my personality. So I don't look to jump on bandwagons and stuff. So to me, I don't believe that the company can do what they say they can do until they actually do it. Until they actually can go into the marketplace and perform the way they say they can perform, I don't believe them. And then they have to continue to do it because as a publicly traded company, you got to perform every quarter. So I'm able to find weak companies, and I'm able to find how retail and maybe even sometimes institutions are trapped in weak companies. And if the risk becomes too great and their perception of the company or the market sentiment of the company becomes negative, there's a lot of times going to be a sell-off. And then we have short sellers come in with reports that are designed to scare people out of situations. A lot of times it does work, right? It works because it's the reason why they started selling off like this. So when the short seller now comes in after all of this selling and says, well, you know what, this company's fraudulent, it can create even more selling. You understand me? And so that's what people got to understand. So I'm really, really good at finding weak companies, companies that really are not performing, and learning how to take advantage of that situation and put myself in a position to make some money out of it. And I'm getting better and better and better and better at it as time goes on, because we're in an era now where a lot of companies are going public and they really don't have a really good business model and they don't have a track record of success. But there's a lot of capital in the market right now. And there's a lot of people looking to invest their money because we know the banks, they aren't doing anything. Everybody don't want to put their money into cryptocurrency. A lot of people don't understand real estate. So what they do is they put their money in the market and they chase scenarios like this. Why? Because they see them as being inexpensive. See, if you can't afford Tesla, you go after this, right? Because you can't afford Tesla. And then when it started running up, it was cheaper than NEO. So I want to have some exposure to the EV space. Let me go after this company because when it started running up, it was around $30, the same price it is right now. So a lot of people got in on the run up. Right. But the problem is when you run out of new buyers and you're not trading on anything, you're just going to get a lot of sellers because there's no way it can keep going up. Because like I said, what are you trading on? So that's how me understanding it is how we make plays like this. Right now, I can teach you the skill sets of how to do this. And then you just have to be willing to do the due diligence to find these opportunities in the market. But they're everywhere. They really are. And these aren't the kind of companies that a lot of people are talking about because they're not the popular companies, but they actually exist in the market. And you can really leverage these scenarios, right, to capitalize on them and to make money. It's not a guarantee, but you can do it. You have the potential to do it. So that's going to be the wrap up on the QuantumScape play for the social media. Like I said, it's inside my own programs. We're going to go a little bit more in depth as far as looking at the charts and kind of understanding some of the option strikes and why I bought this particular option strike as opposed to another one. And what are some of the future forecasting for this particular company. So if you want to learn more about that and understand how to do it, you need to hit me up about the highest paid part-time job in the world options trading program, or you need to reach out to me about the IPO course. Hope you got value from it. If you know somebody else can get value from it, share it out. This is David W. Williams, and I'll talk to you later.